Bank. We also have Somal Mehta, Head Alternate Research at Mirae Assets, joining us on this show to get us a better sense on some other stocks on the technicals. And Somal, hi, morning. Let's start by talking about the paint sector. You know, big news coming in from Birla Opus, but that's on Grasim. Other than that, so far we've had numbers from Berger and Kansai Nerolac. Nothing too exciting coming in from both of these paint majors. You're reading on the charts for both of them?
Berger Paints, isn't it?
Yes, Berger and Kansai Nerolac.
Right. Good morning to everyone. Berger Paints definitely trading in a very broad range between 520 and 560. So that's a range in the last 2 to 3 months. Now I'll be expecting this range to break on the upside, but right now avoid is my suggestion. The breakout levels would be above 555, and above that I think the next levels would be 580. So wait for a breakout. Once that breaks out above 555, the next level, the targets would be 580 and above. Positive on the stock, but at this point of time, in the very short term, avoid.
Okay, avoid. That's the take on Berger Paints. But let's welcome on board Parag Thakkar as well and figure out what he's making of the market right now. Parag, hi, good morning. Great to have you on the show. So many earnings, Parag. And let's start off with SBI. Whether the earnings have done enough for the PSB rally to continue or not. I think that's the question on everyone's mind.
So see, after such a big rally, you can expect some consolidation. But SBI results were fantastic, I would say. 5 bips QOQ core NIM expansion, the 13% loan book growth YOY, guiding for 12 to 14% YOY loan book growth, uptick in express credit loans where the yields are high. I would say CASA improvement, for example, current account has grown at 18% YOY. And that has helped them to manage cost of funds, and so NIMs have surprised on the positive side. Fees has gone up. So I would say that the SBI management and imagine it's a 43 lakh crore loan book, which is around 23-24% of India's total loan book. And there you have a credit cost of 50 pips only, and it is growing at 12 to 14%. And see the valuations. FY27, if I see, EPS of SBI is 85 rupees and book value is 585, and there is a 280 rupees subsidiary value. So it is trading at hardly 1.1 time for 1.2% ROI, which is inching up to 1.3%. So I would say that I would not rule out a price of SBI of 1150 within a year. But if it has rallied a lot and it is one of my top holdings, I would say that it might consolidate, but that consolidation is a buying opportunity.
Parag bhai, what do you make out of the some of the earnings like Britannia? We had Interglobe coming in on Tuesday evening, and for that matter, Mahindra and Mahindra.
So Mahindra, like SBI, was rock solid. Continuous 14 quarters of double-digit EBITDA growth. No, nothing to complain. Again, because the stock has rallied, it might consolidate, but they are doing wonders. Both Mahindra and Mahindra, TVS Motors, both these companies on the auto pack in the auto pack are doing extremely well on the ground. So sometimes valuation might appear stretched, but they are doing phenomenal things. And plus, this GST cut is a tailwind. Then coming to other results, Britannia, of course, delivered on the margin side. Their input costs are stable. And as Mr. Varun Very always delivers, he has delivered an outstanding margin. Volume growth 1 to 2% was muted because of the GST disruption. But remember that most of the Britannia's products GST has come down, so structurally volume growth also should pick up from here. So Britannia, I was happy with the result. People might get disappointed with very low volume growth, but it is, I would say, one-off because of the GST-led disruption, which is actually a big tailwind from long-term perspective. And apart from palm oil, all other costs are also stable. Then coming to other results, Sun Pharma was a decent one. Specialty Pharma grew by 16% YOY. In fact, within US, if you see, for the first time, Sun Pharma specialty business, which is a very high margin business, and which is the business, as they call it, an innovative business, has crossed the revenues of generic, which is a low margin business. So structurally, PNL is improving. They have reduced, I would say, moderated R&D expense, which is good for margins. I would say Sun Pharma and SBI were the results of the weekend.
Okay, so the two big ones to watch out for Sun Pharma and SBI, and of course, all eyes are going to be on how the stock reacts today. But we've been talking about the FMCG sector. Kunal, weigh in over here. Stack up an HUL, Nestle, Britannia, three prominent players in the biscuit space, and all three very good set of numbers coming in. How are the charts shaping up now?
So Nestle is the stronger one so far. Britannia also is, I think, is at par with respect to the FMCG, the three names which you mentioned. HUL is the only one which has been an underperformer. But it looks like that on the charts, so HUL has come back towards a major trendline support and a rising trendline support, which starts off from the March-April bottom for the stock price. And I think in that sense, you're seeing many of the FMCG names trying to come back into a corrective phase or a mean reversion. So that's the only positive side for many of the FMCG names. And the risk reward starts to look very attractive at current levels, even though the trend is not in favor in the near term. And when you generally see those points of mean reversion, which happens on the back of events, news flow, results, etc., that generally becomes a point where you see selling stopping into these stocks and then slowly and gradually buying emerging into these names. So I believe in that sense, the likes of HUL maybe at current levels of 2004 thereabouts, I think could be a good contra trade to look at.
Okay, that's the take coming in on FMCG. But if you just look at the Tuesday market structure, it was quite intriguing. There were the leadership names. There was M&M, there was Bharti, there was SBI, which all held out. And then a bottom-up story like Titan, which has really spun around and turned around since around Diwali time, pretty much coinciding with gold being at an all-time peak. From there, the stock has rebounded and has been holding out very, very steady. In fact, that was the top performer on the index, while the rest of the market of course, struggled. But we'll discuss some of these trends after this very standpoint, or how much from the market standpoint are Bihar elections critical?
See, my view is that apart from Lok Sabha central election, if there is any disruption in the market due to any state election, that should be used as a buying opportunity if your general overview on the market is good. And as of now, my view on the market is good based on earnings which have come in Q2. Many companies have reported fantastic numbers, in fact, mind-blowing numbers. If you see 3M's number, if you see Blue Dart's number, the numbers were mind-blowing. So, and never expected that a quarter where there was a prolonged monsoon, plus there was a GST related disruption, which is of course going to help all the corporates in long run. I would say that I was really impressed with the numbers. If you see L&T's order book, so everything, so government capex plus government and RBI's boost to consumption by income tax slab increase, repo rate cut of 100 bips, and then GST cut. So I'm extremely positive from India's standpoint, and any big fall in the market due to such Bihar election kind of thing, or even global. For example, dollar index is trading at 100 right now after the hawkish rate cut by Powell. The only thing which I would wishfully think is that tariff reduction for India from 50 to whatever 19%, that should happen quickly. The only expectation is that apart from that, India's micro and macro are falling in place for a fantastic next 1 year.
Parag, how will you look at the markets from here on? Actually, I mean, the earnings for Q2 has been pretty decent compared to the Q1 earnings there. It's not a runaway kind of thing, earnings which have come in, but it's pretty much in line. So how do you see the markets heading from here on?
So my view is that buy on dips continues. Any big disruption, anything apart from tariff, of course, tariff is very, very critical. Tariff reduction has to happen because it involves a lot of sectors like textiles and auto components and footwear and jewelry, of course, which is not very big listed exports of jewelry. Titan is a domestic jewelry thing. But I would say that from employment perspective and from that perspective of consumption, because of employment, I think exports are very, very important and critical. And so this tariff should come down. If tariff comes down, definitely I'll be very, very bullish because Q2 results have been fantastic, I would say. And all the large cap companies, if you see starting from Reliance or Adani Ports result you saw, all the, for example, Remco Cement, a small, the South-based player, they have also outperformed expectations. And the expectations were, really very low because of prolonged monsoon. Uh, uh, Plus, they are doing a great thing on their deleveraging side by selling some of the non-core land parcels. So I would say that Indian corporates are doing absolutely all correct things. The way SBI has managed margins in a quarter where repo rate cut impact was going to be there of about 100 pips. The way they have managed the liability side and actually provided 5 bips QOQ core NIM expansion and increase their guidance, and their express credit is doing well. Auto loans are doing extremely well because of GST cut. So I would say that all in all, FII selling led by higher dollar index because of hawkish Fed or this Bihar election, all these are noises which you can avoid and which you can just focus on earnings and India's fantastic macro to buy on dips. I don't know how long it will go up, but in my view, overall, we are headed higher.
Okay, so lots of factors and lots of macros also at play over here. Somil, coming to you, let's talk about the stock of Paytm. Good set of numbers coming in from Paytm. Their higher net payment margins have aided EBITDA this time around, and it's a beat on that front. Your take on Paytm on the charts?
The Paytm is in the uptrend and the weekly, monthly high top, high bottom formation. Great setup. I think it should be a buy on declines strategy at this point of time. In the very short term, it has been a little sideways and has little bit of selling pressure. But I think around 1200 levels would be a great level to start accumulating a little bit. Crucial levels in the very, very medium term would be 1100 levels, which is a previous swing low. I'm not expecting the stock to go below 1100. So buy and decline should be the strategy. And on the upside, 1350, 1400 levels would be the target in the short to medium term outlook.
Okay, Hindalco, that's going to be one more stock which is going to be in focus after Novelis' weak numbers with the adjusted EBITDA lower 9% on an annual basis and higher scrap prices and tariff pressures as well. In fact, let me take it across to Ashesha and find out what the details from Novelis' quarter were and how does it link to Hindalco. Ashesha?
Well, yes, Hindalco's wholly owned subsidiary Novelis has reported weaker than expected set of numbers. In fact, EBITDA for the quarter gone by declined by about 9% on a year-on-year basis, one on account of tariff and second also on account of lower scrap prices in the quarter gone by. So that weighed heavy on numbers. As far as EBITDA per ton is concerned, that came in at about $448 per ton versus $432 that the company had reported in the previous quarter. So slight improvement on a sequential basis, but despite that, on a year-on-year basis, EBITDA per ton has declined and shipments have largely remained flat on a year-on-year basis. Now, as you mentioned, capex has risen and that is likely to be a big negative for the stock today. Remember, BEML capacity expansion plan is underway. It is likely to be commissioned sometime next fiscal. The capex earlier was at about $4.1 billion. That has now risen by 22%, and the management is guiding for a total capex of $5 billion for this particular project. The management also says that 50% of this $900 million increase is on account of inflation and the balance is on account of the project related costs given the scale of the capacity expansion plan that the company has. So yes, this is likely to be a major negative for the stock today. Apart from this, as far as the fire incident that took place some time ago, the management said that this is likely to weigh heavy on EBITDA to the tune of 100 to 150 million US dollars and negative free cash flow impact of about say 550 to 650 million dollars, and this is likely in the second half of this year. Meanwhile, Nuvama has come out with a report. They say that they are not expecting any kind of earnings recovery in the second half of this year, and perhaps earnings could only recover in FY27. So brokerage houses clearly are not very bullish when it comes to outlook, at least for the remainder of this year. Capex plan cost increase is a major negative, and earnings have also been soft this quarter.
Samuel, how are you looking at some of the counters where already results have come in? Team Lease, you have Blue Star, you have BEML.
Blue Star definitely positive. I've been tracking the stock for a little while now. It's been consolidating above the 200 daily moving average, but I'll be expecting the stock to take support around the 200 daily moving average, which is 1840, 1850 levels. Buy on declines should be the strategy. The medium term, the trend remains positive. High top, high bottom formation, monthly, weekly charts. Great setup for a positional trade. In the very short term, there is a little bit of selling pressure, and I think in the short term there will be a little bit of a consolidation around this area. But buy and decline should be the strategy, and my targets in the medium term would be above 2100.
What about others? BML?
BEML again, same thing, consolidating just about the 200 daily moving average. Bias is positive, view is positive because the long term and the medium term trend still remains positive. A triangle pattern has been forming on the daily charts, and I'll be expecting this pattern to break on the upside. But I will wait for BEML very specifically. I'll wait for a breakout about 2285. Once it breaks out about 2285, I think the next leg on the upside would start for a target of maybe 2550, 2600.
Okay, those are some active performers. But Kunal, as a trend, where is it that you actually see leadership, if at all, and where is it that you're seeing weakness? Because from the screen that was handed over to us on Tuesday, it was just very, very stock specific.
Yeah, very, very stock specific. In fact, there were two leadership sectors, the realty and the PSU banking index. The performance metrics for these stocks, or these sectors, they've retraced a bit. The underperforming sectors, there were three, I think media index, FMCG, and I think IT to a larger extent. So these three sectors, they still continue to remain as underperformers. And there are two metrics to look at. One is from the 24,500 mark when the index recovered 1,500 odd points, and then from the other, from the 26,000 levels where we've retraced 300 to 400 points broadly for the Nifty. On both of the zones, we've seen that realty and PSU banking stocks were the key outperformers. There was a tinge of zone where there were other sectors like metals, etc., which managed to outperform. But even these sectors have gone to a corrective phase. So now we are getting a little bit more short on the number of sectors which are showing signs of strength, and the increase in the number of sectors which are showing signs of weakness, that's adding up. And I think that's the reason why you're seeing the index suddenly going into a mean reversion or a retracement phase from those higher levels. Maybe I think over the next couple of weeks, you might see the markets settling up a little bit at 25,500 mark thereabout, and you might see other sectors trying to make a comeback. And by that, I mean maybe something like pharma index, something like the FMCG stocks. These stocks could individually make a comeback for itself. In a zone where the market goes into a correction, the action becomes very, very stock specific, and the sector trends generally tend to retrace.
Okay, so that's on a couple of sectors and where the leadership could lie going ahead. But Parag, while we were talking about Blue Star on the charts, give us a fundamental take on this entire cooling segment. Yes, when the GST announcement came, you had names like PG, Electroplast, Voltas, Blue Star, they did well. But the extended monsoon continues to be an issue for all of these players. By when are you seeing any recovery, if at all, for some of these names?
There are some things which are not in companies' hands, right? So I would back the companies who do a good job in terms of operational efficiency, in terms of marketing, so Blue Star is one of them. Of course, I don't own Blue Star in my portfolio as of now. We own LG Electronics, which is a recently listed Korean company, to play the consumer durable theme, because we feel that their portfolio is more tilted towards LED TV, washing machine and refrigerators, and of course AC is also there. But I would say that it's a very under-penetrated category play with a very high ROIC, about 60%. And cash-rich company, and investing a lot in India, very serious about India business. We would like to buy LG Electronics on every dips.
Okay, Parag, great to have you on the show. Thanks as always for your time. Let's